Welcome, everybody, to another episode of Straight Talk on Stocks. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies, and joining me, as always, is Kevin Hurley, managing partner of Hurley Investments, LLC. We are just a couple of guys that understand the markets, know the economy, know what's happening, know what's causing things to happen, and we're going to give you the straight, no BS talk on how it all works and how it all affects you. We're going to mix in some politics, we're going to mix in some sports. Occasionally, we are just going to talk about what our kids or our wives have done recently to piss us off. Enjoy another episode of Straight Talk on Stocks. We're live, we're going, welcome. Kevin, how you doing today, man?
I'm doing good. How about yourself, Jeffrey?
You been outside? You still got sunglasses on top of your head?
I have been. In fact, we've got a good foot of snow in the Alpine, Utah area. So to prevent snow blindness and the ability to not catch a movie today on $5 Tuesdays, I am protecting my eyes. In fact, I'm just going to be cool today. I'm going sunglasses only.
Nice. I like it.
Let's talk some stocks, Jeffrey.
Let's talk some stocks. That's what we're here for. This is Straight Talk on Stocks. And we just
said, what if we're at the bottom? What if we bounced off the bottom? And I looked at some of the stocks that I trade, and Disney now sits at 111.68 right now as we're speaking. It was down to 100, down from the 120s. It was pulled down because of, in all honesty, because of the news. There was nothing fundamentally wrong with Disney. It has such a stack of movies coming out this year that it'll be $8 billion free cash flow. Well, that's maybe a little high. 1, 2, 3, 4. It should be maybe in that 4 to 4.5 billion with a B dollar free cash flow from the profit of some of the movies they have coming out. Unbelievable. Visa went down and touched the 125s, up $12 at 137.27 right now. No reason why Visa can't be back up to 150. It's a little scary, but I am going to run stocks for this earnings that I bought in yesterday. I nibbled on Friday, but it was a pretty wimpy nibble. But I have put money to work on stocks that are available with looking at nothing more than some of the free falls that some stocks have gone through. I have not added to Apple. Apple will need to prove itself to me. But Bank of America at $25.30 when it should be a $32 to $35 stock. Baidu down at $162.59. Came down from $288. There's definitely some meat on the bone for a rebound there. On the first time you hear that the China-US deal is in place, that'll benefit Google. That'll benefit NVIDIA. In fact, it'll probably benefit a lot of the semiconductors, as you see and hear a lot of positive news come out of China and the US trade agreement. So I'm picking up stocks, but in doing so, I'm not foolish enough to think that I truly can call the bottom, that my first minor whimpers of, hey, we might be off the bottom on Friday are going to be correct. I will use a long put as insurance on my stock. I might have some long puts that are way out of the money if stocks rebound before their earnings, but I do want to enter positions cautiously where I am purchasing the right to sell my stock at a certain price for a certain period of time, and I'm shocked. Facebook up to 142.35. I have leap long calls out to June 2020. Only like 42 or something on that one. Visa, I have leap long calls at 125, 130, 140, 150, 155 out to January 2021. Boeing, only have an 8-year backlog. I'm ready to put some leap long calls on Boeing 2 years out, where I can have a company that has, such a track record of having a backlog where they can't produce the Dreamliners quick enough to get profits out their door. A Boeing would be an excellent, 350, 2021-ish maybe in January if they're available. leap long call just to let it sit, just to give me the opportunity to be in Boeing at 350 today, where it might be 550 2 years down the road, when they just came out with huge backlog numbers, where 7 or 8 years they have to be working their butts off just to get their orders through that they currently have right now. A lot of opportunity on a lot of stocks. I'm sure I missed a couple there. What are a couple you see or you're thinking of?
Well, you're talking about stocks that are on my watch list because you and I talk about the same companies and trade the same companies a lot. Let me ask you this: what is there something specific? Okay, let me ask the question the right way. Outside of the China trade talks, because and the reason I'm wanting to like compartmentalize that and push that off to the side is because I see that as such a massive X factor. And what I mean by that is no matter what else is going on, if that doesn't come through, it's not going to matter what else is going on. The market's going to panic. We're going to be right back down to lows. We're going to be testing the lows of the past year and a half to 2 years. If that all goes through, or if the enough of a framework on it gets put together that people can, somewhat legitimately say, we've got a deal done. And, Trump's going to say he's got a deal done, whether he does or not. But there's got to be enough of a framework there that there's some legitimacy to saying we've got a deal done. And if that happens, then my question is, is there going to be any economic conditions that keep it from rolling forward? See, let me finish the question, let you answer, and then I'll give you some more thought. What is it outside of China and U.S.-China trade negotiations that makes you think we've hit a bottom? Where are you coming from?
What are my triggers? What's the trigger that said, hey, I'm good to go? And there were actually 2 of them that occurred, but the most important one was the non-farm payroll, or the average the average work week reports that came out last Friday. In December, and I know it's seasonal, but in December, the non-farm payroll was 312 instead of 180. And as you went through the numbers on sectors that were gaining, this big job beat, this ridiculous job beat, even though the ADP employment number was also up by about 96,000. So it kind of gave us a reference, hey, it's going to be big. The non-farm payrolls and the jobs that were created were not the seasonal jobs. They were in finance, and they were in construction, and they were in home building, and they were in growth areas of the United States. So the non-farm payroll, the average work week numbers in general, even though unemployment was up a couple tick points, private was up, it just gave me some confidence to start to nibble. Whereas I hadn't felt that way previous during the week or by the couple up days that we had. It gave me a little confidence to nibble, just to do a little bit. I'll be honest with you, we had Powell speak. And it's my opinion that Powell just needs to get out of his own way. And it's a two-edged sword. I'll be honest with you. We have better economic data. The jackass is going to go ahead and start to raise rates again because he can't think with his head. He can't use other tools to fight recessions that we may be coming up against. He just has to, we need to be able to decrease our interest rate. That's how I'm going to affect our next recession. And it bothers me that that's what he's going to do, but that's what he's going to do in that regard. But his tone, he backed off on some things that he said just 2 to 3 weeks earlier. And because of that, I think our market has seen an opening to gain over 8% off the S&P bottom. I think, with all due respect, because retail, private investment, I'll pick on everyone. Registered investment advisor investment, professional investment. Let's face it, no one really knows what's going on. They're all idiots. We're all idiots. I'm an idiot. And so I think this complacency of, hey, we just had an all clear signal given to us by the Fed. We all know you can't fight the Fed. So money's piling back in. Money's piling back in, and it'll scare me because when we do have a recession or when we do screw up with something that Powell does, we have a pretty good fall to have happen. But this one isn't it. This one doesn't appear to be it. There's too much money on the sidelines, too much money going back in. And I'll be honest with you, there's no reason why we should have a good year this year. Companies don't have enough organic growth to beat numbers from the previous year because that was tax stimulated. We had no real bump last year from the tax stimulus. Was it pushed off a year? I doubt it. I just think we had a lot of other world or global economic events that held the United States back, and I don't think any of those are fixed. There's no way you can tell me that a Brexit's going to help out the European Union. The European Union still doesn't have to bail out the pigs. They have a huge role coming up here, I believe, in March of, $650 billion, where you're going to run into Italy can't pay back their debt, and Portugal and Spain and Greece. I mean, it's just, there's too much bad news still out there on a global macro stage that it'll probably hold the U.S. back this year, and you're not going to get it through earnings. Analysts aren't that smart to back out tax growth from organic growth. They're not smart enough to understand real numbers and spreadsheets and Schedule Ks to look at companies and go, oh, well, they're probably going to have a downfall here and revise numbers ahead of time. They're going to be caught off guard. You're going to have a bunch of them pile in. Oh, I'm so surprised that Apple has lower iPhones and that they pre-announced. So I'm going to drop Apple from $315 down to $195 as a target price. It's like, really? Why don't I want to become an analyst. I want to be an analist and come up with weird crap that doesn't mean anything.
That could be interpreted in such a wrong way. Be careful you ask for that. That's anyway. So I heard you've heard this many times before. I've heard it before, but I heard it again the other day, and it just resonated because it's so fresh. If analysts are so smart, why are they continually surprised? This number surprised the analysts. This number was different than the analyst's expectation. If they're so smart, why are they always wrong and always surprised by what the actual numbers are? Analysts are worthless, but they have a lot of control. I'm going to disagree with one thing you say. I think last year, before the fear of interest rates and before the media did everything they could to crush the flow of the market, I think corporate tax rates were absolutely having an impact, and I'll tell you why. Unemployment is at a historic low across the board. You've got overall unemployment is at like a 3, 4, 5 decade low. You've got Hispanic unemployment all-time low. African American unemployment all-time low. You've got record lows across the board on unemployment, and along with that, you finally have average wage increase, not as much as I was hopeful for. I thought average wage increase would go up faster than it's going up, but it is going up. You had 8 years in the previous administration that was dead flat. And every time they touted low unemployment numbers, I wanted to scream. And look, I pulled all my hair out during those previous 8 years of the Obama. That's when all my hair disappeared, was during the Obama administration. They would tout their unemployment numbers, and they would conveniently ignore the fact that labor participation was at all-time lows, lowest it had been in my lifetime, labor participation. And for our listeners or our viewers that don't understand something, most of you probably do, but I'm going to give you a quick lesson on this. When you go on unemployment, when you lose your job and you file for unemployment, you are now counted as part of the unemployment numbers that are going to get reported. And this is how we determine what percentage of the population who wants to be working is not working. When your unemployment runs out, it may be 6 months, maybe you get an extension and take it to 9 months or a year. In some rare cases, you get an extension even longer than that. But once you stop filing for unemployment, does that automatically mean you're employed now? No, it means you're no longer filing for unemployment. Now what happens is you go into a separate category. Now You are no longer counted as unemployed. You have simply reduced the labor workforce. So for 8 years, when the lying pieces of crap in the previous administration, and for all the accusations they level about this current administration being liars, they lied their butts off constantly. The only difference being they had most of the media on their side backing up what they would say. And no wonder they get called fake news media. And they're deserving of it. They've worked hard to earn that title of fake news media. But you finally have, my point is this, you finally have legitimate unemployment levels that you can brag about. Labor participation is back up. It's not as high as it was pre-recession. And I'm not going to blame the Obama administration on every single, the second George W. Bush, not all his fault, but certainly he didn't do anything to control spending. He's got to take the blame for leading us into that recession. That credit crisis and the housing crisis, that came about on his watch. He was asleep at the wheel. He ought to have blame for that. But for all Barack Obama's bragging about, look at all these great numbers we had, look at everything we did, what a crock. What an absolute bunch of BS. Now we've got legitimate low unemployment, true low unemployment with realistic labor participation rates. And that is a direct result of companies being able to hire because of the money they're not paying in corporate taxes and the money they're able to bring back from overseas. And so you might, I don't think you can untie that and separate that. I don't think you can separate that from the 2017-2018 bull market run that we had prior to the Fed overdoing things. The Fed just overdid it. That's really, as much as anything else, the Fed overdid it. That's what caused us to have a horrible fourth quarter last year. They were so intent and so determined to bring interest rates up and so determined to get money off their balance sheet that they could not, these guys that are so-called experts, they could not see the big picture that the average guy like you and me could see clear as day. They're going to hurt the economy if they continue to raise interest rates at the pace they're raising them. And they did it anyway.
Well, let me go back though, really quickly. I made the comment that the tax benefit didn't benefit our stock market. And you made a good point. Well, it helped on the employment, but I still would push back and say our stock market didn't see the benefit of all the savings in the taxes that were given. And I'm going to blame companies for buying back their own stock versus looking for organic growth or looking for M&A. M&A was just average last year. I'm going to pick on Apple.
There were some major missed opportunities. I would have gone right to Apple as well. Major missed opportunities by Apple.
But I think it was more than just Apple. But I want to pick on Apple. Opportunity to pick up Netflix for a ridiculous price. An opportunity to possibly pick up Disney. Not sure they would have done that. They're picking off $5, $8, $10 million companies, not anything that could move the needle or that could move Apple, which again is pretty weak in my opinion. I was somewhat surprised to see SanDisk bought out. I would like to see Micron do some more by way of some type of M&A with organizations. I think you can see a crossover between technology and healthcare right now. I think you'd see a crossover between technology and finance as well. You mean more of a crossover, because there is some happening. It's not just not nearly as much as what should be happening. Nearly for what was just given to corporate America in tax savings and ways to fill their coffers with money. It's been used pretty poorly, and I'm going to use the stock market returns as my nail in the coffin that proves companies did a poor job of managing this great opportunity of increased cash flows with lower taxes.
Yeah, certainly some blew it. I agree with you wholeheartedly on Apple. There was rumor, and I don't know if this is true or not. I heard that Apple was in the running and had an opportunity and could have quite, with the cash they had on the books, they could have easily outbid Facebook for the purchase of Instagram. And they passed on that. And Instagram is the single biggest success. I don't know if it's the biggest in terms of dollars or revenue, but in terms of growth,
it's carrying Facebook right now.
In terms of growth and profitability, it is keeping Facebook from being an IPO level $35 a share stock right now. Kind of in a reverse fashion of how ESPN continues to drag Disney down. Disney should be a $300 a share stock right now if it wasn't being dragged down continually by ESPN. So Instagram's kind of had the opposite effect for Facebook. But yeah, Apple blew it. There were rumors and maybe the numbers were never there. Maybe Netflix was never willing to accept an offer, or an offer was never proffered. I don't know. But there was all the rumor, a year and a half ago, that Apple may have been wanting to buy Netflix. And then instead, after however long a period of time, they start talking about doing their own thing. There was rumor that Disney was going to buy Netflix, and instead they said, no, we're going to do our own we're going to pull all of our movies off of Netflix and do our own online streaming thing. I got news for Disney, and I love Disney. I've owned Disney. Disney's been a part of my portfolio. Full disclosure here, Disney has been a part of my portfolio since the early part of this century, since the early part of my very active trading level. I was an inactive trader in the 90s, mostly through a company I worked for that gave us employee stock purchase. But when I became a very active investor, active in trader, Disney's been in my portfolio since then. Love the company. Take my family to Disneyland every couple of years in spite of the ridiculous high prices. It is something that they love. It is something that, in my wife's words, it makes memories that you can't put a price tag on. But Disney, they blew it. I'm not going to pay for a subscription for Disney. I'm just simply not going to pay for a subscription for Disney to stream their movies. I'm going to stream what is available to me on Netflix. And when they come out with a new movie, I'm going to buy it on Apple TV. I'm going to buy it through the iTunes store and on Apple TV, because I've got a couple Apple TV units at my home, and I've got 3 of my adult kids that have one, and you can have 5 of them on the same account. So I can buy a new release Disney movie, and when I have them, my grandkids in another part of the country can watch them on my Apple TV account. That's legal and legitimate as long as it's 5 within a family. I hope Apple never gets rid of that.
When it comes to content, Jeffrey, because I am a bit of a Hulu fan, and they've purchased Hulu, or the majority of that, through Fox. I think I'm going to compare the two. I'm going to compare Apple and what they have versus what Netflix has. And I think for a while I will most likely own both subscriptions. And I think in the end I will run over, and I will probably be an Apple subscriber over Netflix.
See, and right now, Netflix, they killed it 2 nights ago at the Golden Globes. They absolutely killed it with awards for mostly what is their original content. Netflix, I heard this on the news this morning, and I know this is kind of a different subject, and we probably need to wrap up within about 5 minutes of now. As we're new to this whole podcasting thing, I'm finding it interesting trying to keep track of time and cover topics that we want to cover without doing too little time and too much time. So for the first time, I've got my timer going here, telling me giving us an idea of where of course I started at about 5-6 minutes into the presentation. So anyway, back to the subject of Netflix. They killed it at the Golden Globes. And what I heard on the news this morning is that it doesn't cost Netflix. They're not skimping or chincing on how much money they're spending to make a movie. The difference with Netflix is when they go directly to live streaming on your TV, it costs them a fraction of what it takes to, even in the digital world now, where movie theaters are not showing it on the big reel, where remember, it wasn't that long ago, you'd sit in a movie theater and every now and then the reel would break or something, and they'd have to pause the movie and get it going. And yeah, I still love the theater experience. I'm not going to stop going to movie theaters because I enjoy that experience. But I got to tell you, Netflix gets their movies out to the public for pennies on the dollar of what Hollywood does right now. And so say what you will, and they're coming out with some great original content. When they clean house at the Golden Globes and get more awards than anyone for, actors and movies and all that kind of stuff, they've got good content. It ticks me off that Disney would pull their content off of there, because Disney gets every time they sell their content to Netflix, they're getting some money. But I'm not gonna switch my subscription to Disney. When a new Disney movie comes out, if it's one we want to take the family to see at the theater, we'll do that. And if not, we'll wait until it's out on DVD. We'll pay $20 and we'll have it on 5 different units that the whole family can watch and enjoy indefinitely.
Well, mark my words, I think you'll see younger families with children move over to the Hulu Disney experience.
Sure.
I think you'll then see more people like us will be using more of the Netflix, and it will come down to content. It'll be content on what makes the difference.
It's going to be
and
content. It's going to be
Disney
price.
By Netflix having their content, there'll be some cross pollination. Hey, I'll trade you 10 of ours for 10 of yours for a month, and they'll find a way to work that out.
What I'll be interested in seeing, quite honestly, is, and this is maybe the note we can end on, is where Amazon ends up coming into all of this, because Amazon doesn't have nearly the selection of movies right now, but if they continue to grow that selection of movies, I'm going to pay for Amazon Prime whether they have movies and music or not. I love the fact that right now, currently, it is a bonus that there are movies I can find on Amazon Prime, and they've got some good original series. If you haven't watched it already, go on Amazon Prime and watch the first season of Jack Ryan series with Jim Halpert from The Office. I know the actor's name is, I think it's John Krasinski, and he does a phenomenal job. Hats off. And John, if you want to invite me to the next screening of your movie, or just, to hang out and have dinner with you and Emily Blunt, for this free plug, there's no charge to this plug, but if I'm letting you know. But no, he does a phenomenal job as Jack Ryan. If you've read the Tom Clancy series, all of Tom Clancy's books that include Jack Ryan as the main character, it looks to me like this series is going to kind of keep it contained to a young Jack Ryan as a young CIA analyst, and it's not going to, in this first season, he's not even married and has kids yet, whereas in the first Tom Clancy book that he was introduced, he was already married and had a couple of young kids. But bottom line is, I binge watched that series start to finish. Every episode I finished, I wanted to go to the next one. I got to the end of the season. I'm dying for them to come out with that next season. That is going to be, in my opinion, if they do as good a job with season 2 as they did with season 1, that will be a hit series. And that is an Amazon Prime original. That is not content. So if Amazon keeps doing what they're doing and they start expanding selection, I'm telling you, I put this on your radar right now. And if it happens, we're going to come back to this date and you're going to look. I'm going to make a prediction right now. Year to year and a half, Amazon is going to buy Netflix.
Well, let me throw something else out there that we haven't talked about, just really quickly. What if there isn't a loser? What if it's at a price point where, $14 for Netflix for me, for 4 people to get on, $9 for, well, I'm a Prime subscriber as well for Amazon. What if Hulu stays at the $9 or even goes up to 14? I could totally see me having all 3 services.
Well, I've got all 3 now.
Out of all that I want to watch. And once they all turn out to be winners for it, who knows?
So you bring up a really good point, and I've got Amazon, I've got Hulu, I've got Netflix right now. I've got all 3, and then with part of my internet cable package, because I still have that, I actually have HBO and HBO Now, which is kind of not as much content, but some of it I really like. I've got several of those right now, but Kevin, there's a large number of families in the U.S. that have to choose 1 or 2 of them. They've got their budget limits them to having 1 or 2 of them. This is the appeal over traditional cable. Instead of having to pay $150 a month for a cable package that has all the channels, you get a la carte and say, I'm going to get Netflix for $15 a month. I'm going to get Hulu for another 10. But some people still say, I don't want to stretch into getting, paying $10 a month for CBS All Access and another $12 a month for HBO and another this much for this, another this. Some families got to say the whole point of this a la carte thing is that I choose one or two of these and I'm satisfied with that, versus the cable package that used to make me include all of it. If I wanted one channel like ESPN, I had to upgrade 3 packages from their base thing because they know ESPN is so popular. And then they forced me to get crap like the Nature Channel and the Hallmark Channel.
Right. So listen, what if, and for the first time in my life, I can't believe I'm going to say this, what if for those people, they bail on cable, and instead they spend half as much for Disney and Netflix?
A lot of them are that you're okay. You're kind of helping make my point. It's not what I'm saying is you and I are amongst a percentage of people who will pay for 4 or 5 or 6 of these streaming services. And only because I have to have like the highest speed business level internet in my home office, I get some cable channels with it, and then I think I pay $5 extra a month for some live sports that I want.
Right.
Okay, but there are a lot of families that are going way away from traditional cable, but to really make a dent in their budget and help make ends meet, they're replacing it with only 1 or 2 of those streaming services. And that's where the war, that's where the companies battle for your dollars. It's not for people like us who will buy Amazon Prime, Netflix, Hulu, HBO Now, maybe add the Disney streaming service when it comes. It's not for those people. It's for the people that say, look, my budget is such that for me, it's got to be an either or. I can do Netflix or I can do Hulu. And even though we're talking only $10, $15 a month, people are saying, I got my priorities. I've got a limited budget. For me, it's got to be one or the other.
So you know what I think? I think Disney should hire me to do cost analysis and show how much it saves in babysitting fees. And it's a no-brainer. You do both.
Forget about Disney. I want Jay Powell with his 120 million net worth to just hire me for a month or two to be his publicist. I'll do it for cheap. I'll charge him like $300,000. That's a drop. $300,000 is a drop in the bucket for Jay Powell. I will be his publicist. I will coach him on what to say and what not to say, because I'm sure he is a very intelligent guy, but the guy does not have formal training in how to communicate. And it almost, it sunk our market for the month of December. It absolutely sunk the month of December because he's such a lousy communicator. Kevin, I'm looking at my little timer thing here. And on top of that, I've got some things that I've got to get to today and some things that I've got to do. Great talking to you again. Let's do it again tomorrow, as we always do. And last thing, don't forget, Trump's going to make an address to the nation tonight. He's going to talk about the border wall. Whatever he says, the primetime networks, the ABC, NBC, CBS, CNN, they're all going to give some Democrat moron some time to rebut whatever he says. He hasn't even spoken yet, and you've already got some Democrats out in front of the camera saying, I know whatever he says is going to be a lie. And no matter what he says, they will say it's a lie. He can speak absolute factual information. He can give real statistics, real numbers of people crossing the border, real numbers of people that are terrorists, real number of people that have criminal backgrounds. He can have every statistic to back that up, and the Democrats will still say he's lying about everything, and the media will still say he's lying about everything. And we could have a whole, I know we try and stick with stock market stuff, at least in part, but we could have an entire podcast that's just on the political media bullcrap that's out there. And it sickens me. I wish more Americans could see through the garbage that is being peddled to them from the major networks on a regular basis. It's sickening to me. CNN, they're treasonous in my opinion. You look up the definition of treason and tell me CNN is not going out of their way to try and hurt our country.
Just to end on something positive, Alienware rolls out its monstrous Area 51M gaming laptop at CES. There's a laptop that's thin called Area 51M.
What's their ticker symbol for Alienware?
Resolution.
Are they publicly
And
traded? What's their ticker symbol?
it's 8.5 pounds with a 21-inch Predator screen. It just came across for me.
Are they publicly traded?
NVIDIA graphics chip, but I guess you now have a 21-inch screen laptop that's relatively thin and only 8.5 pounds. Pretty cool.
Awesome. I'll get one.
Let's get a TV that you're carrying around for your laptop.
My goal wasn't to turn this podcast into a product testing thing, but maybe I'll have to buy one of those laptops, use it as a tax write-off, and tell you whether it's any good or not. I'm not a gamer though. Everything I do is market related and helps run my business. So
That's a Dell laptop, by the way. They call
it's
it
a Dell.
Alienware line, but it's a 2 new gaming laptops distributed through Dell, and I'm kind of interested. It looks pretty cool.
I haven't been a huge fan of Dell in the past, but maybe I'll come back around. All right, I'm going to log out. Kevin, good talking to you. Enjoy the rest of your day.
Talk to you tomorrow. Have a good one, guys.